Welcome to the new era of finance. If you think the stock market is still driven by Wall Street traders shouting in a pit, you're about 2 decades behind. Today, the real power isn't in a boardroom. It's inside a server, humming with the silent, relentless logic of artificial intelligence. By 2026, the global financial landscape has been completely reshaped. It's no longer a battle of human nerves, but a silent war of algorithms. For years, we were taught that to build wealth, we needed to pore over balance sheets and analyze company leadership. That's fundamental analysis, and while it's not useless, it's no longer the whole story. The real action, the execution of trades, has been taken over by AI. This isn't just a minor tech upgrade. It's a fundamental shift in how the market even discovers what something is worth. Think about it. A piece of news, like a Federal Reserve announcement or a geopolitical event, doesn't need a human to read it anymore. Before you can even finish a headline, natural language processing engines have already scanned thousands of reports, speeches, and articles in microseconds. They've understood the sentiment, calculated the impact, and placed trades before a human analyst has even had their first sip of coffee. The market has become a massive, lightning-fast information processing machine. Understanding this reality is the new baseline for anyone serious about their financial future. The game has changed, and the rules are now written in code. So, how do we navigate this new world? To understand modern finance, you need to understand predictive modeling. Forget the simple charts and trend lines of the past. Modern AI uses something called deep learning to find hidden connections in data that a human could never spot. For example, an AI might discover a link between satellite images of crowded parking lots in Ohio and the quarterly earnings of a tech company in California. This is what we call alternative data, and it's where the real advantage, the alpha, is hiding today. Financial education in 2026 isn't about memorizing stock tickers. It's about learning how to use these powerful insights. We're seeing large language models, the same tech behind tools like ChatGPT, being fine-tuned specifically on financial data. These FineLMs can predict market volatility with incredible accuracy. When you hear experts talk about smart money, they're not talking about a secret club of billionaires. They're referring to institutional investors using reinforcement learning. These AIs train in simulated markets, experiencing thousands of virtual market crashes every hour. This teaches them how to manage risk in ways that are simply beyond human capability. For us, the individual investors, the goal isn't to try and outsmart the machine. That's a losing battle. The winning strategy is to learn the machine's logic and align our own investments with it. Now, let us talk about something that is quietly revolutionizing the very concept of ownership: the tokenization of assets. Viewed through the lens of AI thrives on data, the more granular, the better. And tokenization provides the most detailed data imaginable. When a real-world asset, like a commercial real estate portfolio, is tokenized on a blockchain, every transaction, every bit of cash flow, and every tax implication can be tracked in real time by an AI agent. This creates what's known as a liquid economy. Assets that were once illiquid, meaning they were hard to sell quickly, like a piece of a skyscraper or a private art collection, can now be traded instantly, 24/7. From an investment perspective, this is the ultimate form of diversification. You're no longer limited to just stocks and bonds. You could own a fraction of a high-yield AI data center in Virginia, or a piece of a busy logistics hub in Singapore. And the best part, an AI can manage your risk exposure across all these different assets automatically. This is the world of enterprise AI, a sector that's attracting serious capital from high-net-worth individuals and institutional sponsors. It's about making complex higher-return assets accessible and manageable for a wider audience. All thanks to the power of AI-driven data analysis. One of the strongest is loss aversion. The psychological pain of losing money is so intense that it often causes us to make terrible decisions, like selling at the bottom or holding on to a losing investment for too long. An AI doesn't feel pain. It doesn't get greedy or scared. It operates on a strict, unbreakable set of mathematical rules. This is where AI-driven risk management truly shines. We're now seeing advanced risk parity models that go far beyond simple stop losses. These eyes don't just look at how much a single stock might go up or down. They analyze the entire portfolio, covariance, how all the different assets move in relation to one another. If the AI detects a major shift in the market, like changing interest rates that could affect everything, it can automatically rebalance thousands of portfolios in a split second to protect against potential losses. This technique, known as dynamic hedging, used to be the exclusive secret of elite hedge funds. Now, thanks to AI-powered fintech platforms, this sophisticated level of risk management is becoming accessible to serious retail investors. The future of wealth protection isn't about gut feelings. It's about algorithmic precision. So what does this all mean for you? It means the landscape of opportunity has never been wider, but the tools required to seize it have changed. The algorithmic era of finance isn't something to be feared. It's something to be understood and leveraged. It is about shifting your mindset from trying to beat the market to aligning with the intelligent systems that now define it. From predictive models that find hidden value to tokenized assets that offer unprecedented diversification, and AI-driven risk management that protects your capital, the future is here. The key is to educate yourself, to embrace these new technologies, and to position yourself to build wealth in this exciting new world. This is the financial revolution, and it's powered by AI. Thank you so much for watching. If you found this information valuable and want to learn more about how AI is shaping the future of wealth, make sure to hit that like button and subscribe to the channel. We've got a lot more to cover. See you in the next video. Get ready, because the very concept of money is about to be rewritten. We're on the brink of a financial revolution, and by the end of this video, you'll understand the 4 seismic shifts that will redefine wealth, investing, and ownership by 2026. This isn't just about getting richer, it's about getting smarter. First, let's talk about the future of money itself. Central bank digital currencies, or CBDCs. Now, don't mistake these for just a digital dollar or a crypto coin. CBDCs are programmable money. Imagine a financial system where tax collection, dividend payouts, and even interest rate changes happen automatically, in real time, at the protocol level. This is what we call programmable liquidity. When you merge this with artificial intelligence, the game completely changes. AI agents will become your personal financial managers, constantly optimizing your cash flow based on live economic data. The old world delays of banking waiting for transfers, for markets to open, for payments to clear, they're all about to vanish. We're entering a 24/7 financial ecosystem where your capital never sleeps. It's always working, always being optimized. The key takeaway for every investor watching is this. Come 2026, the speed of your money will be just as crucial as the amount of your money. If your capital is sitting idle, you're already falling behind. Now, let's move on to the second major shift, the rise of personal wealth agents. For centuries, The idea of a family office, a dedicated team of experts managing every aspect of your finances, was a luxury reserved for the ultra-wealthy. But AI is about to democratize this elite service for everyone. Picture this: an autonomous wealth agent, a specialized AI trained on global tax laws, inheritance regulations, and complex investment strategies. This isn't your standard robo-advisor suggesting a generic 60/40ths portfolio. We're talking about hyper-personalized financial strategies. This AI will analyze your unique risk tolerance, your specific life goals, your retirement plans, and even personal values like your desired carbon footprint. Based on all that, it will construct a completely bespoke financial roadmap just for you. This is the new frontier of wealth management, moving from one-size-fits-all advice to a truly personal financial concierge, accessible right from your pocket. So we have programmable money and personal AI wealth agents. But what stops this whole system from collapsing? What if the AI is fed bad information? This brings us to our third, and perhaps most critical, pillar: blockchain as the ultimate source of truth. The single biggest danger in an AI-driven financial world is data integrity. If an AI model is trained on manipulated or corrupted market data, the results could be catastrophic. Think automated flash crashes on a global scale. This is where blockchain technology becomes indispensable. It serves as the truth layer for the entire financial system. By recording all market data, every trade, every price tick, every transaction on a decentralized and immutable ledger, we ensure that the AI agents are operating on high-fidelity, tamper-proof data. This powerful synergy between AI and blockchain creates what we call auditable intelligence. Every single decision made by an algorithm can be traced back to the exact data point that prompted it. This level of transparency is non-negotiable for institutional investors, and it's what will provide the trust needed for this new financial architecture to flourish. This brings us to our final, mind-bending shift: the new philosophy of ownership through fractionalization. For most of history, the most valuable assets, like prime real estate, fine art, or major infrastructure projects, were what we call lumpy assets. You needed millions of dollars just to get in the game. That era is officially ending. Thanks to AI-managed platforms, we are entering the granular economy. Fractionalization allows you to own a tiny piece of almost anything. Instead of needing millions to invest in a data center, you can now own 0.01% of a high-performance compute cluster. Instead of funding an entire power plant, you can own a fraction of a cutting-edge sustainable energy farm. This completely changes the rules of diversification. The strategy is no longer about picking one or two winning sectors. The new game is micro-diversification, owning tiny shares in thousands of different AI-vetted projects all across the globe. This creates an incredibly resilient investment portfolio, one that's far less vulnerable to shocks in any single market or industry. Your wealth is spread not across a dozen assets, but across thousands of micro-assets. So, let's recap the 4 pillars of the 2026 financial landscape. We have programmable liquidity through CBDCs and AI, making your money faster and smarter. We have personal wealth agents, giving everyone access to elite, hyper-personalized financial planning. We have blockchain as the truth layer, ensuring the data driving our AI is incorruptible. And finally, we have the granular economy, where fractional ownership allows for unprecedented micro-diversification. This isn't a distant, science fiction future. The foundations are being laid right now. The convergence of these technologies is creating a financial ecosystem that is more intelligent, more transparent, more accessible, and more resilient than anything we've ever seen before. Understanding these shifts is the first step to not just surviving, but thriving in the new world of finance. Thank you so much for watching. If you found this breakdown valuable, make sure to hit that like button and subscribe for more deep dives into the future of tech and finance. I'll see you in the next video. Welcome back. Today, we're diving deep into the future of finance, a landscape that's being completely rewritten by technology. Let's start with a new gold standard. In the past, geopolitical power was anchored by gold and oil. But as we look towards 2026 and beyond, a new asset has taken center stage. Compute power, high-performance semiconductors, and the vast energy infrastructure needed to run them are the new hard assets of our digital age. Think of it this way: compute is the new oil. Nations aren't just competing for oil fields anymore. They're in a race to build the biggest, most powerful data centers. For a savvy investor, this changes everything. Energy, infrastructure, and semiconductor supply chains are no longer just tech stocks. They are the fundamental utilities of the entire global economy. We're already seeing AI agents trading compute futures, allowing companies to lock in the cost of processing power they'll need months from now. To build a resilient portfolio for the next decade, you must understand this physical layer of the internet. It's the bedrock upon which everything else is built. Now, as our financial systems get smarter and more automated, the nature of theft is evolving right alongside them. We're on the brink of the quantum horizon, a point where today's encryption methods could be shattered by quantum computers. This has sparked a brand new sector: quantum-resistant custody. Financial institutions are pouring billions into upgrading their systems to what's called post-quantum cryptography. For you, the individual investor, security is no longer about having a strong password. It's about using advanced tools like biometric hardware wallets and multi-party computation. In an AI-driven economy, your most valuable asset is your digital signature. If that signature is ever compromised, an AI could liquidate your entire portfolio in the blink of an eye. This is why cybersecurity is now a core pillar of financial literacy. We're moving toward a world where you don't just insure your house or your car, but you also ensure the integrity of your digital identity. This automation raises a profound question. What is the role of human labor when algorithms can do so much? If AI can manage portfolios, write code, and optimize supply chains better than any human, the traditional model of working for an income starts to crumble. This is leading us toward an equity-based economy. In this new model, wealth isn't generated primarily through your labor, but through owning productive assets and intellectual property. The focus of financial education has to shift. It's no longer just about getting a good job. It's about teaching people how to become asset owners rather than just labor providers. The gap between those who own the algorithms and those who are displaced by them is the defining challenge of our time. To make sure you're on the right side of this divide, you need to transition from a salary mindset to a capital mindset. So, as we look ahead to 2030, the roadmap for success is becoming clear. The analog era of finance is officially behind us. The successful investor of the future will be a hybrid strategist. This is someone who deeply understands the technical layers of AI and blockchain, but still has the human wisdom to know when to take a step back and trust their own judgment. The keys to navigating this new era are threefold. First, technological literacy. You have to understand the governance layer of every asset you own. Second, asset autonomy. You must ensure that you have independent custody and control of your digital wealth. And third, physical resilience. You need to invest in the real-world energy and compute infrastructure that powers this entire AI-driven world. The transition will be rocky, no doubt. But for those who understand the architecture of this new grid, it represents the single greatest opportunity for wealth creation in human history. The system is being rewritten from the ground up. Make sure you're one of the people holding the pen. To thrive, the investor of 2026 must adopt a multi-layered defense strategy. For years, financial education has preached diversification across different asset classes. But in the age of AI, you have to diversify across jurisdictional and technical layers as well. This means you don't just hold different stocks. You hold assets across different network states and protocols. The concept of exit velocity is now paramount. This is your ability to move capital across borders and ledgers in real time, bypassing the old, slow bottlenecks of the traditional financial system. To achieve this, your portfolio needs to be made up of assets that offer non-correlated digital sovereignty. You need assets that are not just resistant to inflation, but also resistant to technological enclosure, meaning they can't be easily controlled or shut down by a single entity. This is the ultimate hedge, owning the very assets that the system needs to function, but that the system doesn't fundamentally control. It's about architecting your own financial independence. Finally, let's talk about the most valuable asset in your entire portfolio: your attention and your discernment. In an economy where AI generates 99% of the noise, the ability to detect the real signal is the rarest and most valuable skill. A machine can calculate probabilities with incredible speed and accuracy, but it cannot understand human purpose. It can't grasp our dreams, our values, or our vision for the future. The investors who will truly thrive in 2030 and beyond are those who use AI as an exoskeleton for their minds, not as a replacement for their judgment. You must learn to read the code of the markets, to see when a price movement is organic and when it is just the result of a cascade of algorithms. This cognitive sovereignty is the final frontier. While the world gets more and more automated, that human element, the ability to envision a future that doesn't exist, yet in the data remains the only true source of innovation and outsized returns. So there you have it. The roadmap is laid out before you. We've seen how currency is transforming into code, the rise of compute power as the new global standard, and the massive shift toward algorithmic governance. This future isn't something to be afraid of. It's a new landscape to be mastered. You are no longer just a passive observer in the financial system. You are an architect of your own wealth. By aligning your capital with the foundational technologies of the next century, AI, blockchain, and energy infrastructure, you're not just surviving this transition, you're leading it. The era of the sovereign individual hasn't ended. It has simply evolved. It has moved from the physical world into the digital ether. The fascinating part is that the very tools the system uses for control are the same tools available for your liberation. The only difference lies in who is writing the prompt. Welcome to the new grid. Let's get ready to build. Thanks for watching, and don't forget to subscribe for more insights into the future of finance. The financial world, you know, is already obsolete. By 2026, the rules won't just be different, they'll be written in a language most people can't even read. But you're here, which means you're not most people. Today, we're decoding the future of wealth, moving beyond the noise of daily charts and into the deep architecture of the new economy. Let's start with the most fundamental law. Value requires energy. In the past, it was the energy to mine gold or the calories burned by a worker. Today, in the age of AI, value is measured in terawatts and computing power. Welcome to the era of energy standard finance. Every AI model, every blockchain transaction, every single trade has a thermodynamic cost. This means the most stable assets are no longer just digital code, but the physical power grids that sustain them. We're seeing a huge shift where big tech is becoming big energy. Companies are building small nuclear reactors right next to their data centers. Why? Because if you own the energy, you own the ability to compute. And if you own the compute, you own the market. This is the hard asset layer that can't be virtualized away. Now, in a market dominated by these powerful AIs, the old zero-sum game is dead. We're now in a state of algorithmic game theory. AI agents aren't just competing, they're constantly probing each other, forming complex webs of cooperative competition. For you, the investor, the game is no longer about picking the company with the best product. It's about identifying which AI ecosystem has the most stickiness, which protocol is winning the network effect. When you invest, you're voting with your capital on which algorithmic governance model will win. It's a high-stakes game of digital chess, where the rules change in real time. If the incentives of a network are misaligned, the protocol will collapse, no matter how advanced its AI seems. But while we focus on the machines, we can't forget the final destination of all this value, the human brain. AI is now mastering neuroeconomic optimization. Financial platforms are being designed to trigger specific dopamine responses in your brain, keeping your capital locked inside their ecosystems. This is the attention equity model. Your wealth is now directly tied to your ability to resist this algorithmic manipulation. The system wants you to trade frequently, to be volatile, to react to every AI-generated signal. The winning strategy for 2026 is low-frequency mastery. By intentionally slowing down your decision-making, you escape the algorithmic trap where machines have the upper hand. You move the battle to a terrain where human long-term vision still beats machine short-term optimization. Next, let's talk about one of the most dangerous innovations: synthetic assets. Using AI, we can now create digital twins of anything: a barrel of oil, a real estate index, even a volatility token. The danger here is the liquidity mirage. AI can create the illusion of a deep, liquid market by trading these synthetic assets back and forth with itself, making them appear far safer than they really are. Your job is to distinguish between primary assets, those with a real link to physical reality, and this derivative noise, because when a real crisis hits, that mirage evaporates, and only those holding real, non-synthetic assets will remain solvent. This is the flight to reality, the defining move of the mature investor in the late 2020s. So where do you hold these assets? The old idea of a tax haven like Zurich or Singapore is becoming outdated. In the age of algorithmic wealth, we're seeing the rise of digital jurisdictions. These are non-geographic zones defined by smart contract law, not physical borders. The sophisticated investor isn't just offshoring their capital anymore. They're on-chaining it into decentralized autonomous jurisdictions, where code is law. AI agents can move assets between these different protocols in real time, constantly seeking the most favorable legal and tax environments. This creates a fluid sovereignty, where capital flows to the protocols offering the best protection and the lowest friction. Understanding how to navigate these digital layers is the new frontier of global wealth management. But even if your assets are in the right jurisdiction, are they secure? We are rapidly approaching coup-day, the moment a quantum computer can break today's encryption. If you're holding digital assets, you have to understand that the vaults of yesterday are becoming transparent. The new gold standard for wealth preservation is post-quantum cryptography. This means migrating your assets to ledgers that use new forms of encryption, like lattice-based cryptography. Cold storage isn't enough anymore. You need future-proofed storage. The most advanced systems use something called multi-party computation, where your private key never exists in one single piece, making it nearly impossible for even a quantum computer to steal your assets. Security is everything. Now for the most profound societal shift, the automation of the middle class. By 2026, AI will have commoditized most knowledge work, counting, legal research, even mid-level management. This isn't just a job crisis, it's a financial structure crisis. The old advice to save from your salary becomes useless when salaries stagnate or disappear. We are moving toward a capital-only economy. The only path forward is equity ownership. Instead of selling your time for money, you must own microequity in the very AI systems that are replacing human labor. Think of it as owning the robots. This is the universal basic assets model. As the world becomes more efficient through automation, your wealth grows right alongside it, because you own a piece of the machine. Finally, let us pull back the curtain on the hidden layer of the global economy, the ghost markets. These are AI-exclusive dark pools where institutional algorithms trade massive blocks of assets without ever moving the public price. It's estimated that over 80% of institutional volume will happen in these invisible markets. These AEs are trained to read retail sentiment on social media and use it as a counter-indicator to trade against you in the dark pools. To survive, you have to learn to track the footprints of these ghosts. This means looking beyond the price chart and focusing on on-chain analytics and volume profiles. You have to learn to see the shadow cast by the big players. That is how you gain an edge against the machines. The future of finance is complex, and it's unforgiving. But it's not random. There are rules, there are structures, and there is a logic to it all. By understanding these deep currents from energy and algorithms to psychology and security, you're not just preparing for the future, you're building it. Thanks for joining me on this deep dive. If you found this valuable, make sure you subscribe and hit the bell so you don't miss our next exploration into the new economy. Stay sharp. Welcome back to the channel. Today, we're taking a deep dive into the financial world of 2026, a world that looks fundamentally different from the one we know. We're moving beyond simple stock picking and into an era where ideas, algorithms, and even your reputation are the most valuable assets. Let's explore what this new economic landscape looks like. First up, the tokenization of intellectual property. For centuries, if you had a brilliant idea, a patent, or a piece of software, it was a frozen asset. Monetizing it meant navigating slow, expensive licensing deals or drawn-out legal battles. But by 2026, IP is becoming liquid. We're talking about IP and FTS and fractionalized licensing. Imagine an AI that can value a new algorithm or a biotech breakthrough based on its future potential. That valuation is then dropped onto a blockchain, turning the idea itself into a tradable asset. This is the financialization of genius. For investors, this means you can buy into the royalty stream of a promising AI algorithm just as easily as you buy a stock. The real value, the alpha, is no longer just in the company, but in the specific data and IP that company controls. This changes everything. Financial education isn't about PE ratios anymore. It's about intangible asset valuation. We're shifting from a world of things to a world of flows, where the ultimate portfolio owns the rights to the automated processes that will run our future. Next, let's look at real estate. This sector, historically the slowest and most human-intensive part of finance, is getting a complete AI overhaul. We've gone way beyond simple online estimates. We're now in the era of autonomous property management. The landlord of 2026 is increasingly a DAO, a decentralized autonomous organization. These AI systems handle everything from vetting tenants using blockchain-verified identities to automatically scheduling maintenance through smart home sensors. But the biggest shift is in microequity real estate. Because an AI can manage the complexity of 10,000 owners for a single apartment building, property has become a high-speed asset. You can swap your exposure from New York residential to Tokyo commercial in a single transaction. This liquid real estate eliminates the traditional friction of brokers and months-long closing periods. The investor's role is no longer property manager, but portfolio architect, curating a global spread of square footage from a digital dashboard. Now, let's talk about you. Your credit score is about to get a radical upgrade, or perhaps a terrifying one. The old FICO score is a relic. In 2026, your creditworthiness is determined by deep behavioral analysis. AI agents are monitoring thousands of data points: your on-chain transaction history, your social media sentiment, the stability of your digital identity, and even the network quality of the people you interact with. This is the social financial synthesis. If you exhibit optimized behaviors, you'll get access to incredibly low interest rates. But for those who don't understand the algorithm's criteria, it creates a massive barrier. This means financial education must now include algorithmic reputation management. We need to learn how to curate our digital financial footprint to maintain access to cheap capital. In this new grid, your reputation is a literal asset you can collateralize. If an AI sees you as a high-value node, the doors of global liquidity swing open. If not, you're pushed to the high-interest fringes of the old system. So, how do you thrive in this new world? The ultimate goal for the savvy investor is to transition from being a customer of a bank to becoming a sovereign node in the global network. With user-friendly personal servers and AI-powered custody hubs becoming more common, the average person can now host their own financial infrastructure. You become your own bank, your own asset manager. This transition is happening against a monumental backdrop: the global debt crisis. By 2026, the traditional debt-based monetary system has hit a mathematical wall. The global debt-to-GDP ratio has made full repayment an impossibility. You might hear whispers of a digital debt jubilee, but don't be fooled. This doesn't mean your debts just disappear. It means they get converted. We're seeing a massive shift from debt-based assets to equity-based protocols. The system is trying to swap unpayable sovereign debt for utility tokens in the new digital infrastructure. If your wealth is sitting in traditional bonds or savings accounts, you're at risk of a soft default. The nominal value might stay the same, but the purchasing power will be siphoned off to fund this transition. The only way to protect yourself is through credit migration, moving your wealth out of the liability layer of traditional banking and into the asset layer of productive, decentralized infrastructure. This is how you avoid the great compression that always comes at the end of a debt supercycle. As AI continues to displace traditional jobs, we're facing a huge societal debate: universal basic income, or UBI, versus universal basic assets, or UBI. UBI is a flow-based solution, a monthly stipend from the state, likely distributed through a central bank digital currency. This sounds good, but these digital currencies could come with programmable expiration dates or spending restrictions, keeping people in a state of permanent dependency. The alternative path, and the one we advocate for here, is the pursuit of universal basic assets. Instead of waiting for a handout, the sovereign investor focuses on owning a basket of autonomous assets: AI nodes, tokenized real estate, energy-producing infrastructure. UBA provides structural freedom. While UBI can be switched off with a single line of code, UBA generates permissionless yield. We're talking about building your own personal sovereign wealth fund. By 2026, the middle class will be split into two camps: those living on the grid's stipend, and those who own a piece of the grid's engine. But there's a huge technical challenge in this new world: the oracle problem. If an AI is managing your investments, how does it know that a real-world event, like a crop failure or a shipment arriving, actually happened? In a world of deepfakes and synthetic noise, truth verification is a trillion-dollar industry. This has led to the rise of decentralized oracle networks. These are systems that use economic incentives to ensure that real-world data is accurately reported to the blockchain. For investors, oracles are a critical infrastructure play. If you own the truth verification layer, you own the bridge between the physical and digital worlds. Without reliable oracles, the entire AI finance ecosystem would collapse. Investing in proof-of-reality protocols is like investing in the notary's public of the digital age. Finally, this all leads to a new investment paradigm: evolutionary finance. Static, buy-and-hold investing is becoming obsolete. In 2026, you don't just buy an asset, you stake your capital into competing algorithms. We're witnessing a Darwinian struggle between different AI trading strategies. Your job as an investor is to identify and back the algorithms that are best adapted to the current market environment. It's a dynamic, living ecosystem. The fittest algorithms survive and generate returns, while the weaker ones fall away. This isn't just about picking winners. It's about participating in the very evolution of finance itself. This future is complex, and it's arriving faster than we think. Understanding these shifts is the first step to not just surviving, but thriving in the algorithmic economy. Thanks for watching. If you found this valuable, be sure to like, subscribe, and hit that notification bell so you don't miss our next deep dive. See you in the next video. Welcome back, financial pioneers. Today, we're embarking on a journey not just into the future of money, but into the future of civilization itself. We're going to explore how the very definitions of nations, wealth, and even life are being completely rewritten by technology. Forget everything you know about traditional investing. By the end of this, you won't just be an investor. You'll be a systems engineer of your own life. Let us start with a radical new idea that's already taking shape: the rise of the network state. In 2026, the concept of a country is getting a massive upgrade. Think of it less as a piece of land with borders, and more as a highly aligned online community. This is a network state. It starts as a group of people online, united by a common vision. They have the power for collective action. They crowdfund territory all around the globe. And their ultimate goal is to gain diplomatic recognition from legacy nations. For us, the financial architects, this isn't just a political curiosity. It represents an entirely new asset class: social protocol, equity. Imagine digital enclaves that operate on their own internal currencies, have their own legal frameworks, and even AI-governed social safety nets. Investing in a network state isn't like buying a government bond. It's like buying a share in a brand new civilization. You're getting in on the ground floor of a new society. These new entities are in a global competition for what we call citizenship as a service. They're re-attracting the most productive people, the nodes in the network, by offering things traditional states struggle with: lower taxes, better security, and superior AI-driven infrastructure. The old model of being tied to the place you were born is fading. So what's the goal for the forward-thinking investor? It's to diversify your civilizational exposure. By holding assets across multiple network states, you are no longer a hostage to the fiscal policy or political instability of a single geographic location. You become a global, liquid citizen. You can move your wealth, your assets, and even your physical presence to wherever the code, the rules of the society is most favorable to your personal sovereignty. This is the first pillar of our future, moving beyond geographic constraints and into the world of decentralized geopolitics. Now, let's dive deeper, from the macro level of new nations to the micro level of every single transaction you make. Welcome to the dark forest of DeFi. The world of decentralized finance has evolved, and it's become a dangerous place. Technologists call it the dark forest for a reason. It's an environment of perfect information, where every move you make is visible to predatory algorithms. These are MEVPOTs, which stands for Maximal Extractable Value. Here's how it works in 2026. You decide to make a trade on a decentralized exchange. You send your transaction to the public mempool, which is like a waiting room for transactions. Instantly, an AI agent detects it. Before your trade is even confirmed, this bot front-runs you. It copies your trade, executes it a millisecond faster, drives up the price, and then sells to you at that inflated price. It extracts a tax from your trade, and you just lost money. To survive in the dark forest, your financial education has to evolve. It must focus on what we call stealth execution. We need to learn how to use privacy layers and tools like flashbots to shield our financial intentions from these machines. Think of this as the financial camouflage layer of your portfolio. It's just like a submarine, using silent running to avoid being detected by sonar. The sovereign investor uses shielded transactions and zero-knowledge proofs, or ZK. These incredible technologies allow you to move capital and prove the validity of a transaction without revealing any of the underlying data. Not the sender, not the receiver, not the amount. Let me be clear. This isn't about hiding from the law or doing anything illegal. It's about defending your alpha, your edge, your profits from automated exploitation by institutional giants and their armies of bots. In the dark forest, the loudest traders get eaten first. The quietest hunter is the most successful. Mastering financial camouflage is no longer optional. It's essential for survival. So we've secured our nation-state exposure, and we've learned to move silently in the digital world. But what are we actually investing for? What is the ultimate goal of all this wealth? This brings us to our third, and perhaps most profound, transformation: the biology of money. A revolutionary shift is happening right now, where wealth is becoming directly integrated with biological utility. In 2026, the most sophisticated investors aren't just thinking about returns in dollars or crypto. They're focused on longevity-backed assets. As artificial intelligence continues to supercharge biotechnology, the most valuable exit for your capital is no longer a yacht or a mansion. It's the extension of your healthy human lifespan. We're seeing the tokenization of genetic research and biotech intellectual property. Investors are now staking their capital into what's called DeSi, or decentralized science. These are protocols that fund cutting-edge anti-aging research and personalized genomic medicine, free from the bottlenecks of traditional funding. And here's where it gets truly mind-bending. In this new ecosystem, your return on investment might not be paid out in dollars. It might come in the form of life extension credits, or priority access to new medical breakthroughs that could add decades to your life. This is the ultimate convergence of financial capital and biological capital. Think about it logically. If you have all the digital tokens in the world, but you have no biological runway left to spend them, your wealth is functionally zero. It's worthless. Therefore, the 2030 roadmap for every serious investor must include a bioallocation strategy. This means actively investing in the infrastructure that preserves the most important node in your entire portfolio: the human node, yourself. Wealth is no longer just about living well. It's about living longer. We've covered a lot of ground, from new digital nations to predatory algorithms to the fusion of wealth and health. So let's synthesize this into a technical summary. the core infrastructure of your future. As we conclude this journey, it's crucial to understand that you are no longer just an investor watching charts. You are a systems engineer of your own life. First, the network state layer. Your portfolio must include social protocol equity. This diversifies your sovereign risk and gives you a stake in emerging digital civilizations. You are betting on communities, not just companies. Second, the DeFi stealth layer. You must operate within the dark forest using financial camouflage. This means mastering privacy tools like zero-knowledge proofs and shielded transactions to protect your capital from mevbots and algorithmic predators. Your financial privacy is your financial security. Third, the biocapital layer. Your asset allocation must extend beyond traditional and digital assets into longevity-backed assets. This means investing in DC, biotech, and the platforms that are working to extend healthy human lifespans. This is the investment that makes all other investments worthwhile. These three pillars, decentralized geopolitics, stealth finance, and biological investment, form the technical infrastructure for the sovereign individual of the near future. It's a roadmap for navigating a world where technology is reshaping everything we thought we knew about power, money, and life itself. This isn't science fiction. This is the strategic playbook for 2026 and beyond. Thank you for joining me on this deep dive into the future. The world is changing faster than ever, but with the right knowledge and the right tools, you can not only adapt, but thrive. If you found this valuable, make sure to like, subscribe, and hit that notification bell so you don't miss our next exploration into the frontiers of finance and technology. Stay sovereign. The line between a physical asset and its digital copy, it's gone. By 2030, we won't just live in reality. We'll live in the synthetic reality. In the old world, derivatives like options and futures were just side bets on the real market. But in the algorithmic economy of today, the derivatives market is the main event. AI agents are now trading what we call synthetic twins of literally everything. Think about it. The weather patterns in the Midwest that affect corn prices, or even the speed of data zipping through transatlantic cables. Every single variable is being turned into a financial instrument. For you, the investor, this means risk can be sliced up into tiny, manageable pieces. You can actually hedge against a power outage in your specific neighborhood or a sudden negative trend on social media. We're moving beyond investing in assets to investing in volatility itself. When the world gets more chaotic, the only person who wins is the one who designed the system to profit from that chaos. And who's running this system? Not humans. We are seeing the birth of silicon covenants. These are incredibly complex financial agreements where A is negotiate, execute, and enforce contracts with other AIs. No lawyers, no middlemen. Imagine a supply chain where an AI at a shipping port instantly pays an AI at a factory, which then pays an AI-managed power grid. It all happens in microseconds, based on real-time data from sensors. This is the zero-trust economy. If something goes wrong, you don't call a lawyer. The code simply executes the penalty. Your new job isn't to trust a company, but to trust the code. The new due diligence is about understanding the edge cases, the loopholes where the code might fail. Just when we thought AI was the final frontier, quantum computing entered the scene. We're not just talking about unbreakable security anymore. We're talking about quantum optimization. The first quantum-ready hedge funds are already here. They use quantum power to solve portfolio problems that would take a regular supercomputer thousands of years. This is absolute optimization. It means the market is becoming efficient on a terrifying level. Every tiny mispricing, every arbitrage opportunity, is being closed in an instant. For the average person, this means the old strategy of finding a cheap stock is completely dead. The only way to win now is to find the algorithm-free zones, the small, niche, human-centric markets that the quantum machines haven't bothered with yet. We'll show you where to find them. In every massive, complex system, there are gaps, voids, blind spots where different protocols don't quite line up, or where AI logic just doesn't see. In this new financial grid, these voids are the most profitable places to be. This is where you find grey market alpha. It's not about breaking the law. It's about operating between the systems. It's about having the skill to move value from an IR-run organization to a traditional offshore bank, or from a tokenized energy credit to a physical gold bar in a private vault. These connection points are where real wealth is now generated. By becoming a bridge node, you provide the missing piece of the puzzle that the system needs to function. You become the essential lubricant for the new machine, and the system will pay you handsomely for it. Now, let's talk about the ultimate key. Your financial identity is evolving. It's moving away from what you know, like a password, and what you have, like a physical key, to who you are, your biometrics. By 2030, your unique heartbeat signature, your iris pattern, even the way you walk, will become your private keys. This creates almost unhackable security, but it also creates the ultimate lock-in. When your biology is tied to the financial ledger, your digital sovereignty and your physical self are one and the same. The real challenge, and the holy grail of 2030's finance, is what we call privacy-preserving biometrics. Using advanced cryptography to prove you are you, without ever revealing your actual biological data. It tests the ability to be a trusted player on the global stage while remaining a complete ghost to anyone watching. Verified anonymity. This all leads to one final destination, the singularity of capital. This is the moment where financial transactions happen at the speed of thought, where the market and reality itself become one. The final form of the human investor in this world is the sovereign node. You are no longer just a subject of a king, a citizen of a state, or a customer of a bank. You are a standalone financial entity, a sovereign unit on a global network, interacting with other sovereign units through the pure language of mathematics and shared goals. The world you once knew is gone. Its collapse was necessary to clear the ground for this new architecture. This is your operating manual for the new epoch. Welcome to the architect class. Welcome to the new grid. Thanks for watching. Be sure to subscribe for the next chapter.